Well, in today's session, we are seeing the EURUSD consolidating around the pivotal level of 1.200 and looking at its bullish trajectory so far in the day. I think the breach of 1.20 is quite possible. And now the question is whether it is going to happen in today's session or it might take a couple of days more. And I am in favor of I think the continuation of the bullish sentiments for next couple of sessions as well. So the Euro USD might move past 1.200 in today's session or in next couple of sessions, but the momentum is on the higher side, and it will be for us to exploit these sentiments moving forward. Unless and until we see any significant breakout on the bearish side below the key support of around 1.195, I think the underlying momentum is going to remain favorable for the bulls. So now let's see the data which we got earlier in the day. We got the GDP numbers for China, and here we are seeing that for the first quarter, that is the quarter ended March 2021, we are seeing some moderation in the growth of GDP for China. The GDP has expanded, but albeit at a slower rate of 0.6% in terms of quarter and quarter. And in terms of year on year, the figure is quite astounding because of the base effect. Low base of last year has come into play, and as a result of that, the year on year figures are quite high at 18.3%. The industrial production has also slowed down there, and both these numbers are below expectations. So the slowdown is quite pronounced and more than what analysts were looking at, what they were anticipating. Moving for the European session, we got the final inflation data, and here the uptick has been confirmed, and we didn't really see much of an impact on the euro as this was pretty much anticipated. In the US session, we got the housing starts, building permits data, and in both these readings, we are seeing substantial growth momentum as more and more people are feeling confident enough to go for the purchases of new house and starting the construction. So that is being reflected in these figures. We also got the University of Michigan's consumer sentiment data, and here is also increase. Now it stands at 86.5 compared to the prior reading of 84.9. And if we look at the expectations for the reading, we were looking at reading close to 90, but that didn't really materialize. And consumer sentiments are showing the signs of growth, but not much. And I think this is kind of plateauing of the increase which we have observed in recent past in consumer sentiment, as the economy is now in near term quite hot. Of course, it is still far off from the pre-pandemic days, but this uptake which we have observed, which has been quite pronounced in past couple of months, specifically after the vaccination started. So some moderation is not really surprising. We also got the inflation expectations data, and here there is pronounced shift on the higher side. Now more and more people are expecting the inflation to shoot higher, and for this month the expectations stand at 3.7% compared to the prior month's expectations of 3.1%. So there is a pronounced shift on the higher side in people's expectation of the inflationary scenario in coming future, near future. Now let's shift our attention to the technical segment where we will see the Euro USD, and then we will also consider the USD JPY. In both of these currency crosses, of course, the major factor is the USD, and you can say that these trades are kind of inverted mirror images of each other, as we will be looking at some key levels where I think the USD can move, and that is going to result in the impact for both of these currency crosses. So let us start with the Euro USD's technical outlook. This is the daily time frame chart, and here in yesterday's session I had talked about the resistance at around 1.200, and that had pushed the Euro USD lower around 1.195 from where it found the buying momentum, and it has now come back all the way closer to the prior highs, and in today's session it has also established new swing high, and I think we are pretty much likely to see this bullish momentum last. So as I said in introductory remarks, it is a matter of time before we see a breakout in the Euro USD, and for that, of course, the lower levels, the today's low is going to play a key role for helping us determining whether to go for the long trades or simply to sit on the sidelines. So if we have to decide about trading in today's session, I think it is better to sit on the sidelines in today's session, as this is the last day of the week. So if you go for the trade, you will have to hold it over the weekend, and that introduces the risk of any gap up or gap down. So I think to avoid that, it will be better for us to simply sit on the sideline. But we can keep in mind some key levels which are going to be important moving forward. So once you get back to the trading early Monday, you can keep the technical outlook in mind and then trade accordingly. So here in near term, we do have the resistance in place of the first resistance of this month pivot point series, which has so far kept the prices capped just little below 1.20 for 2-3 last 2-3 session. And in today's session, so far, the Euro USD has struggled to cross and hold above it. So I think we should allow this situation to play out, and once we have a breakout on the higher side, that will boost our chances of finding profitable trades, as we will be past the key hurdle, and that will give more reasons for the market participants to again add on to their current long positioning. So if we have to keep in mind some of the key levels moving forward, I think we should keep an eye on 50 SMA. So in today's session, also on Monday, as long as the Euro USD is holding well above 50 SMA, we can continue to target for the buy trades, and that will entail buying fairly close to its highest level in recent past. But as is the experience in the market, what is rising keeps rising. So that kind of maxim can also be applied here. And on the lower side, as I said, the key level to watch out is going to be this near-term swing low. In today's session only, it was established early in the day, and I think as long as Euro USD is trading well above it, it will be better for us to continue to look for buying opportunities as and when we see that the breakout is possible, and the risk reward ratio is also be going to be favorable enough if we are shorting it going long above the 50 SMA while keeping the stop loss just little below the 50 SMA. I think 10-20 pips buffer should be good enough, so we are not really keeping the stop loss all the way below this prior swing low, so that is not going to widen our stop loss. Instead of that, we should be looking for the buy trade above this 50 SMA anywhere in the price band of 1.198 to 1.199 if the Euro USD holds, and then breakout should be targeted above 1.200. And as I said, on the lower side, the stop loss of around 1.196 at the max should be good enough. So depending on the entry, you will have to decide on the stop loss, and 20 pips stop loss should be good enough for trading in the Euro USD. Now let's see what's the case with the USD JPY. The daily time frame chart, and here the USD JPY has broken below the past swing high level, which had provided some support in the earlier fall, and we had seen the USD JPY hold above 109 for quite some days, but then we have this fresh breakout on the bearish side, and I think looking at its current price trajectory, we are pretty much likely to see the USD JPY breaching past 108.5 levels in coming sessions. So I'm still bearish on the USD JPY, and we have some reasons to believe from the technical front that we can profit from this bearishness prevalent in the USD JPY provided, we have to keep in mind that stop losses should be kept sharp enough so that we don't lose too much money in case of being wrong. So in today's session, we have both these technical parameters, the regression curve as well as the pivot point series, both pointing downward. And in light of that, I feel we should be looking for shorting opportunities as long as USD JPY is trading below this 109 mark. So in near term, that is going to be the key level to watch out for. And unless and until we have any fresh breakout on the higher side above 109, I think the near term sentiments are likely to remain bearish. And in due course of time, even the levels close to this first support of this month's pivot point series can be expected, but that is likely to take some days and not it is not really likely to happen overnight. It can, but my anticipation is that it will take some time and decline. Even if it happens, it likely going to be gradual. So in today's session, watch out for these swing highs established just little below 109 level. So I think if you are targeting for any trade in USD JPY, this immediate high established around 108.9 should hold well. So for next couple of sessions, see how the price action evolves. And today being the last day of the week, I won't really advise looking for the trading entry straight away in today's session. Instead, we can wait it out till Monday, and by that we will have more clarity also. And if we don't really see any breach above this 108.9 level, the immediate swing high, and if the sentiments are showing the signs of further decline, if we see further upward momentum in bearishness. By upward momentum, I mean by enhanced momentum, not upward really. And in that case, we can then expect the decline to accelerate and reach past the immediate swing low. The yesterday's low established around 108.6. So that remains a possibility, and I think the risk reward ratio is also quite favorable enough as any stop loss kept above this swing high. The stop loss anywhere closer to 109 should hold good, while we target the levels below 108.5 or even beyond that if we want to hold on to the shorting opportunity, shorting trade. Then I think even the levels around 108 can be expected, but that is likely to take some days, and that will demand patience on our part. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback section, and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you next time. That is on Monday next week. Goodbye.